What's up, ladies and gentlemen? This is Lindsberg, Mr. For Real, here with For Real Automotive, where we are for real about everything automotive. Today we're going to discuss how your credit score impacts your monthly payment when you purchase a vehicle. It's very different when you purchase a vehicle and when you lease a vehicle. We all know that credit plays a great part of you getting into a car, number one, and getting into the car of your desire, number two, and number three, getting that monthly payment that fits into your budget. Now, we all have dreams and desires of what type of car we want, but sometimes we have to take the process car, and that's the car that builds your credit. Now, we all seen these great lease prices on television being advertised. One of the key factors to getting that particular great lease price is having a 700 plus credit score. In the world of leasing, it is tier-based. So the higher the credit score, the lower the monthly payment. Very similar to purchasing a vehicle. The higher the credit score, the lower the interest rate. The lower your credit score, the higher your interest rate. Here in Michigan, the highest interest rate you can have on an auto loan is 24.99%. Whoa, that's high. But sometimes the big three automakers even offer 0% interest rate on certain vehicles. Now that's great. 0% or 24.99%. Which do you prefer? Well, it all depends on your credit score. Now, you can get into a car with a low credit score. It's challenging. The bank will look at your past performance, how you paid your bills, your ability to pay, how much money you make, and your stability. How long have you been on your job? And I'm gonna get into those a little deeper a little later. When leasing a vehicle, you can get an automatic approval. How do you get automatic approval? 700 or plus. If your credit score is below a 700, then some things have to be done behind the scenes to get that particular approval. Is it difficult? No. Is it challenging? Sometimes. That's when you might need some money as a down payment. Now, purchasing a vehicle can be a little easier with the lower credit score than leasing. Don't ask me why, that's the way it is. If you have a low credit score, you are high risk. I know that sounds bad, however, the creditors look at what's on black and white. They look at your past performance. If you didn't pay your credit cards on time, they look at how you paid your auto loan. You can have a good 620 or a bad 620. What's a good 620? That means you pay all your bills on time, you just have a lot of debt. What's a bad 620? You don't pay your bills on time, you make good money, and you've been late a couple times on your auto payment. You never want to be 30 days late on your auto payment because all of the auto loan lenders look at your past performance. So when leasing a vehicle, it's tier-based. A 700 credit score gives you an A plus tier. A 699 to 680 gives you an A1. A 679 to 660, A2, a B1, a B2, a B3, and then it gets to the point where they cut you off. The lowest credit score that you possibly can have when leasing is a 600. Now, is that the best option for you? You tell me. If you want a short-term commitment, it can be. However, you're going to pay a pretty penny for that particular lease. So for example, on this 2020 Equinox lease, this is a 36-month lease, 10,000 miles a year. A person with a B1 credit score, which is normally about a 620, if they put $1,000 down, they're going to pay about $360 a month. A person with an A2 credit score, if they put $1,000 down, they're going to pay about $310 a month. But a person with an A plus credit score or A1, if they put $1,000 down, they could be about $279 a month. So you can see how a good credit score plays an intricate part of getting you that great monthly payment. So on the channel, we're going to continue to talk about credit because it is so important when purchasing a vehicle. So if you have any questions, drop them in the comment section below. And remember, it's always for real.